Hey everyone, welcome back to Lunch at the Market. Sorry, my hair actually kind of looks like a mess, but when it's like 0 degrees outside and you constantly have to put a hat on and off, then it's pretty much impossible to maintain any kind of decent hair, unless you just want to freeze, which is a possibility. But anyway, back to the trade. So, Apple, right? Everybody's best stock ever in their portfolio turned into their worst stock ever in their portfolio, and now is a total crapshoot. Yes, that's right. Nobody has any flipping idea what the heck Apple's going to do, or if they have another product up their sleeve, or if it's dead and no one will ever buy an iPhone again. Which, by the way, I have two iPhones. Let me just tell you that the Verizon iPhone is absolutely hideous and terrible and horrible. It actually works less good than the AT&T iPhone. So get to AT&T and dump Verizon. Verizon is terrible. Um, I guess I kind of have better signal in some locations, but the actual phone, like how the phone works, it doesn't work. You can't really add a call like you can on the AT&T phone. Um, Switching back and forth between calls is a nightmare. There's sometimes it won't let you merge a call when you're trying to add a call. Sometimes it'll just act like it's dialing and then just never dial out. So at least when this one doesn't work, it's just because there's no signal. When this one doesn't work, it's because it's on Verizon's network, and Verizon's network is not as good as AT&T's. So anyway, enough being said about all the many iPhones that I have, which by the way is up to like 5 or 6 in this family, because the old iPhones just get kept around as iPod touches. Anyway, it's still a total crapshoot. Even if I am talking to my iMac right now, sitting next to my iPad with my 5 billion iPhones, it doesn't matter because nobody likes the stock anymore. But there is some risk to the upside. Why? Well, because that's what happens to every stock when it gets beat to oblivion, i.e., Hewlett Packard, Dell, Research in Motion, and a whole bunch of other dead companies that have almost nothing left to offer the world. Okay, so we've seen that they can bounce. Hey, Apple's a dead company now, right? Well, at least it's a deadbeat stock. So the risk we think is to the upside. You can get a nice slice of that by going with, drumroll please, that's right, a lopsided call spread. Remember, we've talked about lopsided spreads in the past. Normally, a spread is like equidistant, right? Like $5 here, $5 here, and then both wings of the butterfly are equidistant. Well, the problem with that is if you don't call it exactly in the middle, then you lose all your money. And I'm allergic to that. It just makes me feel bad. Nobody likes that. So, what do? You get lopsided. So we're going to go with the 500, 530, 535 call, lopsided call butterfly. Okay, this wing is huge. Okay, this wing is not so huge. So the implied move that John and Jerry told us about is about $30. So I figure it's pinned at 500 right now. You get the $30 on earnings. If we can pin it 30, then by golly, I've got a 300% return on my hands because I paid about 975 for that. Unfortunately, you're gonna have to pay up a little bit for that trade. It's trading close to $11 right now, but there's still a pretty good risk reward. If you buy that and it goes to 530, then it's going to be worth $30. If it goes to 535 or above, you'll lose $5 on the short side. You'll gain $30. I don't have that many hands on the other side, and net it'll be worth $25, which is a better than 200% return on your money. So that's pretty good risk reward. Okay, don't bet your farm on it, but it's a nice, decent way to throw 1 or 2%, 3% of your portfolio at it. And here's the other thing: if Apple careens down $30, you can buy back the calls that you're short and then play for a real bounce. Because sometimes you get like knee-jerk reactions when everybody's positioned the same way and everybody hates the same stock, which is basically what it feels like with Apple. Anyway, can you tell we had a rough December with Apple? Anyway, bottom line is the 500, 530, 535 way lopsided call fly for right around $11 right now. It actually continues to go up. I don't know, maybe somebody knows something that we don't about Apple. But anyway, the reality is, if that thing crashes, you can buy those back for a whole lot cheaper because implied volatility, John and Jerry said, is like 90% right now. That is insanity. So you want to sell expensive options, but you want to do it in a way that you won't get your face ripped off if you're wrong. Okay? So either way, buy back the short side. If that thing, in fact, buy back just the short side and leave the super cheap 535 call that you're long and leave the 500 call and then hope for a bounce. And you could just Wham Bam, thank you, ma'am. I'm going to go out to February expiration because as much as I want to have like 4 days to be right, I'm just not that good. All right. Thanks for joining us again at Lunch at the Market. We're going to try to keep bringing these to you. If you have any questions or comments, hit us up. Hit us up on Twitter at MO Financial. Thanks so much for joining us on Lunch at the Market. Have a great day.